Good morning and welcome to Charting Markets on Tuesday, the 11th of April 2023. After the prolonged Easter weekend in the UK, especially with two bank holidays, one last Friday and one this Monday, equity markets have started the week on a stronger footing, and that was on the back of stronger US markets pushing Asian markets higher overnight, and then that filtered through to European sessions also opening higher earlier today. What basically happened over the last 4 days when the UK was shut for Easter is that we had strong US labor data out on Friday. That led to market participants thinking that the Fed might have to tighten further still, and led to some short-term risk-off sentiment. But on Monday, equity indices in the US started to rally again. Hoping that the inflation data, which is out tomorrow, CPI for the US on Wednesday, will come in as expected or even weaker than expected. And also we have the FOMC minutes out tomorrow, because today basically nothing much is out. So the financial markets are looking ahead towards tomorrow to see what's going to happen next. Now, if we look at the European session and look at the FTSE 100, for example, here on this daily financial bet, we can see that we had some strength coming into the market earlier this morning, as I said, on the back of stronger Asian markets. And we did manage to rally on this daily financial bet to 7,808, very close to this February to April downtrend line, as you can see here at 7,811. Before we started to come off again very slightly. So not much going on here. As I say, we are waiting the CPI data out of the US tomorrow, and also the FOMC minutes, and of course earnings seasons kicking off on Friday with the likes of JP Morgan, Citigroup in the US. So earnings season obviously also going to have an impact on equity prices. But if you look at the markets from a technical perspective, you can see here that we are still in the process of heading higher, and of perhaps heading towards the late February low at 7,853, and also the January highs at 7,876 for the FTSE 100. And for me, what we've seen since the lows made in late March at 7,204 is a 3-wave advance so far, and usually impulse move have 5 waves. So I wouldn't be surprised if we were to advance further, perhaps have a sideways trading pattern for a few days, perhaps even a week or so, before then heading back up again towards the psychological 8,000 mark. So from a technical perspective, for me, as long as we remain above the last reaction high, and that is to say the high from last Tuesday at 7,627, as long as we remain above there on a daily chart closing basis, further upside is likely to be seen. And we've also got this support line here going back to March of this year, which currently can be seen around 7,680. So even if short term we might come off today or just trade sideways, further upsides is still in store. That's at least what the charts seem to be saying at the moment. And the same is the case for the DAX 40 contract. You can see here the German futures market with regards to equities came very close earlier today to retesting its 1-year high made last week at 15,742, before then also consolidating ahead of tomorrow's inflation data coming out of the US. But here the picture is very similar indeed. I mean, we've had a strong up move in a first wave from the 14,459 low made on the 20th of March. Then a wave B correction here, ABC, second wave down, and now we're in a third wave up. And this might be a fourth wave, which then be followed by a fifth wave, taking us above the 15,742 high we've seen so far in April. And if that were to happen, I would have to go onto a weekly chart to show you where our next upside target would be. If that were to happen, we would then be heading up towards the August 2020 high at 6,032, before we then test this long-term 2021 to 23 resistance line around 6,180. So these would be the next upside targets. But as you can see here, last week saw a deceleration in the strength of the uptrend, as you can see on these weekly bars. with regards to the DAX 40, which is normal because we were testing previous resistance seen back in February and March of this year, which dampened the upside to some degree. But provided we stay above the last reaction low, that is to say Wednesday's low from last week at 15,481, for me, the upside seems to be still more likely than any future downside. Moving on to US markets, we've got the Nasdaq 100 on this daily financial bet, and you can see here a very similar picture to that of the DAX 40 contract. We have risen to highs last traded back in August of 2022, namely at 13,226. Then came off around Easter on that strong US labor market data, which led some market players to believe that the Fed hasn't finished tightening yet. And that led to some risk off short term, taking us back to this support line going back to mid-March at around, it comes in around 12,920. But basically then we followed Monday's low at 12,857 by forming this hammer formation on the daily financial bet. And today, so far in the overnight session, we seem to be trading above that hammer formation. If that were to be happening later on the open session as well, and if we were to manage to close above that high from yesterday on the daily financial bet at 13,075, then it is pretty likely that we will be heading back up again towards last week's high at 13,226. And above there, if I go into the weekly chart, we can see we have the August 2022 high at 13,722, which would represent our next upside target. So as you can see here on the weekly chart, we're trading well above the 200-week simple moving average, which was retested during the mini banking crisis just a few weeks ago. And then we bounced off there and resumed our up trend. And basically, this one remains intact from a short-term perspective as long as we stay above Monday's low at 12,857 on a daily chart closing basis. The US dollar has started to depreciate ever so slightly after having risen over the last week or so quite strongly. And we can see the inverse of that on the daily euro dollar chart, where we saw last week's declines from the early April high at 109.73 take us all the way back down again to Monday's low at 108.32. But from there, we then bounced off. And as you can see here today, we are rallying quite strongly. That is the euro against the US dollar on the back of some dollar weakness being seen ahead of tomorrow's FOMC minutes and also tomorrow's March CPI inflation data release coming out of the US. And you can see here the euro-dollar exchange rate is heading back up again towards the 23rd of March high at 109.29, above which sits last week's high at 109.73. And if that were to be taken out, which I expect to be the case over the coming weeks, then we would be heading back up again towards the February high at 110.33 on this daily financial bet. But for this to be and to remain valid, we would need to stay above our current April low at 107.89 on a daily chart closing basis. As long as this is the case, the uptrend remains very much intact and further upside is likely to be seen. Moving on to the British pound against the US dollar, what we can see here is the same picture with regards to the US dollar strengthening last week and pushing cable down. As we can see here, we had 4 consecutive days of lower prices after having had a high at 125.25 last week on Tuesday. And then this Monday's low at 123.45 was followed by some really strong upside on the British pound versus the US dollar exchange rate. And as you can see here, we're heading back up again towards the highs seen back in December and also in January of this year between 124.46 to 48. So short term, that might act as resistance today. But if we were to take it out, which is quite likely, given the recent uptrend we've seen since 118.04, the March low, we should then be heading back up again and above the 125.25 high seen so far in April. And if you then look at a weekly chart, what we can see here is we are currently trying to break above these highs I just mentioned from December and January. If we were to manage to do so, we would then be heading back up again towards the lows seen in September 2020 at 126.76, and then we also have the May 2020 high, 22 high, excuse me, at 126.67, which comes in just below that. So this is our upside target area. Basically 126.67 to around 127.45, where the 61.8 Fibonacci retracement of the entire 2021 to 2022 decline can be seen. Ahead of the red line here, the 200-week simple moving average at 128.72. So as you can see here, we've been rising now for 6 consecutive weeks, and it looks as if we are likely to have a 7th consecutive week of higher prices with regards to the price of the British pound versus the US dollar, provided we stay above Monday's low at 123.45 on a daily chart closing basis this week. Moving on to the dollar yen chart, I mean, that has been quite interesting in that we basically headed back up again quite strongly over the last few days and briefly traded in a 1-month high, and yesterday hit 133 yen and 87 sen, taking us slightly above the previous week's high at 133.75 before coming off again today as the new central bank governor of the Bank of Japan, in his inaugural speech today, stuck to the central bank's dovish, ultra loose monetary policy, since Japan is nowhere near its 2% inflation target yet. So that led to some short-term strength being seen in the US dollar, some weakness in the yen, taking the currency pair, that led to some dollar weakness, taking the currency pair back down again towards the 133 area short term. But from a technical perspective, if we were to manage to stay below 133.87 on a daily chart closing basis, it looks quite likely that we could then be heading back down again towards the March low at 129.65 over the coming days and weeks, as this previous downtrend we've seen since the highs made earlier in March at 137.91 is likely to continue. And what we've seen in the last 3 weeks is just a sideways trading pattern within that longer medium-term downtrend. Commodity markets have also been kind of interesting over the last few days. The price of Brent crude oil, for example, still trading with a huge gap, which was formed just over 10 days ago on the back of OPEC Plus surprisingly cutting its oil production by about 1.66 million barrels a day. And that was done on the weekend of the end of March and beginning of April. As you can see here, we had a huge jump in the price of crude oil to around the $84.50 mark, around which Brent crude oil has been trading for the last week. So far, we remain above this previous resistance zone, as you can see here, going back to November of last year, which should now, because of inverse polarity, act as a support line. And that might act as potential support around the $83 mark. But I wouldn't be surprised if, as long as we can stay below the 85.94 high seen last week, we might at least partially close part of this price gap before then heading back up again towards the red line here, the 200-day simple moving average at $88.81, simply because price gaps tend to be at least partially closed when they form, unless they are runaway gaps, in which case far more upside should be seen with regard to the price of crude oil. But I'm not saying that that's the case at the moment. So we're just trading sideways. And as I say, I wouldn't be surprised if at least we were to retest that breached downtrend line, which is now a support line going forward. Moving on to gold, what we can see here, the price of gold has come off over the last couple of days, in little trading really over the Easter weekend, even though the UK was shut. Traders with IG could have traded the out of hours trading sessions here. and you can see we bounced off the March to April uptrend line both on Monday and again today, and are currently testing the minor $2,003 to $2,009 per troy ounce resistance area. Takes us back to late March, those highs here. Above there sits last week's high at $2,032. If that would be to be exceeded, then we would be heading back up again towards the March 2022 high at $2,070, and the all-time high made a couple of years earlier, I believe, at $2,075 on this daily financial bet. So here, short-term, the upside still very much intact, provided we stay above Monday's low at $1,982 per troy ounce. If that were to be taken out, though, we would most likely retest the February high at $1,959. But as I say, short term, the upside is still very much intact. And you can see the same happening with regards to the price of copper. Here, this is the daily copper financial bet. And you can see here we formed a hammer formation on Wednesday of last week, then had a bullish confirmation of that hammer, and since then have retested this 1 week resistance line, which currently caps the advance with regards to the price of copper. And for it to continue over the next few days, we need to rise above the last couple of days' highs at $8,879 per ton. If that were to be the case, we could be retesting the psychological $9,000 mark, and perhaps also head back up again towards the high seen at $9,094, which is the late March and also the early April high. So here, further upside remains likely, provided we stay above last week's low at $8,666 per ton. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.